Before I start about Forex, normally this is what I look for. So I start with a calendar, a Forex calendar. This is where I get to see the news event that is happening. So let's say for today, these are the news that will happen. So my trading time will be from maybe 9:30 or 11. It's like a London session, but I do the trading, so I wait for a setup from London. It can take from London to the next day, but my Tuesday it's the best trading day because after the Monday consolidation, after the Monday manipulation, price moves, and also the Tuesday it normally creates the high or the low of the day normally. So it has many pips depending, maybe Tuesday or Wednesday, depending on the chart or the news event. It normally creates a high volume. So as you can see here, normally we don't trade if there is no news at all, and also we don't trade if there are a lot of news. So today we have the CPI, USD CPI. So as you can see here, these red candles that are affecting USD, and the USD is the main currency here because as you can see the chart, let's go to the 1 hour, the 4-hour time frame. As you can see, I missed a trade here, so let me keep it. So let me start with this any currency that starts with USD, maybe USD GPY, USD GPY, USD CAD. These charts will be affected, and also the currency that ends with GPY will be affected opposite. So if the price, let's say in USD GPY, makes the price in USD GPY drops, that means currency that are ending with USD will also will rise, will do the opposite of the reaction. So if Euro USD will drop, USD GPY will rise, as you can see the next page also. So they are corresponding. So my favorite pairs is Euro USD. Most of the times the Euro USD is the best currency, because it's not the best because maybe it has something that no other thing has, but it's because I analyzed it better. I analyzed the weekly time frame, the daily time frame, and the 4-hour time frame. You can't have 10 charts, currencies, then you say you remember everything that's happening for weekly, daily, and 4-hour. No, you have to have at least 1 or 2 for beginner, that is. So mostly I do, if it's a USD is not capable of doing getting maybe a one shot one kill, I move to USD, to gold. But gold not always. I move to gold, or if I don't see a good setup but there is a good movement, maybe a news, I go to USD GPY to see the opposite, to analyze, like, if this was supposed to go down, and let me confirm with the Euro USD if it's going upward. If I'm confused, sometimes you can see a fair value gap for making the price drop, and you can also see a fair value gap for making the price rise. So you're confused, but so if you're confused, you just switch to the corresponding currency, and it will help you for that. So after getting to see the news, normally you don't go to the chart yet. Come to the 10-year bond. This is the bar chart where the market makers use it. So I'll start with a minute. okay, I wanted this. So we'll start the March contract. As you can see here, the March contract, the volume. This is position. Let me see the chart. Let me show you how the chart looks like. So normally I like this chart to be at least 4 hours, or let me keep it to daily. 2 hour worth of information. So as you can see, I needed this arrow. Let's say this is the bond, and normally I like taking, where's the arrow? Just missed the arrow. So this is the chart. So orders, normally I take the red one, I ignore the blue one. Let me see if I can say do the settings, but it's okay. Let me move to expanding boundary above. No, I wish I couldn't do that. I wish I couldn't do that. Fuck. So a minute, my guys, let me correct this. So the blue is the best. So I'll just I wanted to show something about this, but I think it's like I need, like, let's say this. Let me keep it at this point. Then I'll show you. So guys, this is what I normally do for it's not like predicting, but making a high probability sell or high probability buy, because this is what the market makers use. And who are the market makers? The market makers are the people who bring a lot of money into Forex. Lot of money into Forex. So normally I take this, so it's not accessing, I can't access it, but normally I place it at the 0, but this is okay. So normally you can see these are the orders for the market makers, these are the retailers. So normally look at this, it's like it's going down. Like if it's going down, that means the price will go down. It tries going up, this is the volume. So as you can mark here, we'll see, let's say I show you this fall. This fall, it's represented by this. This fall, it's like this fall. This fall, it's like this fall. It's like this fall, this fall, this fall, and as you can see, this fall is like this fall. Like they move the market. Like okay, so let's say let me mark this and this. So this rise is this rise, this fall, this fall, this fall, this fall. Like this is how the price goes. So these are the orders for the market makers. So if they do a lot of sale, as you can see, there's a 108,986 contracts selling. So that means the price will go down below. This is what I look for. I analyze so this is the 10-year, the 30-year note bond. As you can see right now, like it's dropping. As you can see, it's dropping. Then it wants to come back. Like people are buying while the retailers are selling. So these are the liquidity. So don't look at this. Just look at this. So the opposite. So normal do the opposite of what retailers do, because retailers don't confirm. They don't enter for confirmation. They just enter. So about this, after learning, so I'll take you to the other bond, the 10-year bond. Before before I got the 10-year bond, let me let's use the line. As you can see right now, let's use the 4-hour time frame because we are doing intraday. As you can see here, so here you are looking for SMT divergent. So at this point, as you can see, the price drops, sweeps this liquidity, then rises, right? So it's either the price rises to sweep this liquidity or drops because maybe there will be a fair value gap in between here. So as you can see, the price is rising, but it hasn't swept any liquidity. So on the 10-year notes, or the 5-year notes, one of them must be the same as this. Yeah, the price didn't reach the point where it sweeps liquidity, but one of it will reach a point but that it has already swept liquidity, so the volatility will come down depending on the news. So this is what I normally look before I enter a news trade, because this is where they drive the market. So they drive the market after liquidity, they drop it randomly. So as you can see on the 10-year, let's look on the 10-year as fast as possible because they don't want a long video. I don't want a long video. Look, the more contracts, the charts will be the same. As you can see, the price sweeps the liquidity, but it didn't sweep the higher. But it already had been swept. It was already swept. So as you can see now, it's 7 a.m. So this one hasn't been swept. And let's look with the. So these are the bonds people buy. So you can look at the 5-year note. Interactive chart. So this is what I wanted to say. So as you can see, it hasn't gone that far, but it has swept the this liquidity, and also it's dropping. So this is the proof. Let's say you look in the 1 hour time frame. This price will drop. That is one thing I'm sure about it. The price will drop. There is no SMT divergent, but the price will drop. As you can see, it's searching for this liquidity. So the price will go down for this liquidity, as you can mark, and I'll be here after 3:30. As you can see, the news is at 4:30. 4:30. That is 4:30 p.m. I'm not sure if I'll be home. Yeah, the place to go, but I'll try my best to keep time all that time. So this is all about what I look for market before entering here. And after you enter here, start with the weekly chart. Let me just delete everything. Then this is not my favorite pair. So I'm waiting on the USD. Euro USD, my favorite pair. As you can see, we don't start with the Euro USD currently. We just start with the corresponding, the dollar index. This is what the Trump drives it. So right now we have more political news, and because of that we'll start with the analyzing the dollar index. So we start by drawing some. So before that, let's just use this. let me just don't go that far. The highest high, the lowest low. So the highest high must be here, and the lowest here. I didn't mark the middle. So the center, the 50% range is here. So price normally reacts at the middle. That's one thing I wanted to prove to you. So normally this is the area 50% range. So sometimes price comes below, then reacts at the middle. So this is where more volatility are. So they take the price according to that. So we go deeper. As we can see here, we can also do the just mark the 50 range first. So then in between the 50 range, we start looking for PDRs. PDRs, what are PDRs? These are places where market reacts normally. So as you can see on this area, this is the PDRs, this is the order block, bullish, bearish order block, bullish order block. You start searching for the areas we marked. So this is a breaker. Let's mark it. So that is a breaker, and so this breaker, and also we have another breaker. So this is one thing I want to tell you. So price will go at this point, it has to drop, or it can just go upward to this fair value gap, inverse fair value gap. So we mark all areas, then we start looking for probability, why it must go there and why it shouldn't. We are not predicting. Like right now, I don't know where it goes, but it must give me probability where it goes. Let's say at this point, it reacts, but it won't react that much because there's much liquidity upside. So price might go this point, then rises. So if it goes at this point, there are many orders maybe for the market makers at this point. They come, then they go up. Then if they go at this point, there are many orders. Maybe some people will sell their orders, waiting for the market to drop. So this is the point. We look at the 4-hour time frame. At the 4-hour time frame, as you can see, the price drops to this area, then it will go upward. So this proves that the price will still go upward because it has already targeted this point. So here we must, maybe if it will drop, we look for a setup here. So the price will rise. That is one thing I want to confirm to you. Then there's a fair value gap here. We just drop down to analyze it. So the price must drop at this point because of this order block and this fair value gap, then price rises. So if the price rises, that means in EURUSD it will drop. As at this point you can see the price needs to drop below. Let's start with the actually you mark the low and the high. And the middle way it reacts sometimes. Look for PDRs. So price has reacted at this area twice, once, twice. So we're waiting for price to reach either at this point, then drops. Because this is a breaker, it came, then it will drop. So in between here, we are looking for fair value gap in between this area. As you can see, we have this inverse fair value gap, but it's already mitigated. Yes, we have this fair value gap here, which is already mitigated by this area. So by that reason, we'll see this fair value gap. So this is the point I want to make it clear, so that I'll put my order here, but first we want to go deeper, top down analysis. So 1 hour, this is the order block I'm really want to see, but the confirmation that this order block will be used, because I want to use this one because it's already mitigated. So price will go up for this area. So I want to see a fair value gap in between this area. So I'll move to 30 minutes time frame. There was a fair value gap and it's already mitigated. I'm not sure if it will go back, but it's already mitigated at this area. Let me just mark it. You can see this fair value gap. Let me mark it a different color. And make it as red. But price sometimes go back to fill the liquidity. So if it comes back, I think it will come back to fill this upward, let's say at this point. Because it already swept, so this is a high probability setup, but it was already mitigated. So it's the mitigation of the order block brings it to like low probability. So I might place let's say a sell at this point. Target in this region. So 1:3. Price might come, put an order alert. If price goes at this area, then I'll say this is my setup for the day. As you can see deep down, you still have the fair value gap, so I'll wait for that to happen so that I can enter, risking this area or down below, but I just need 1:3.6. Then my stop loss to this area, and that's it for the day. Already entered a position, not in the position for the trading, but already entered a limit position. So on my account, I want so just because I'm on alert, I won't enter right now. I'll just wait for the best time, because 9:30 is the best time, and I can just enter now. Then it can be taken now, but I'll just wait for the right time. Maybe 9:30, 11:30, 9:30, 11, or 4 p.m. Anyone work. Okay, so thank you. Waiting for the alert also. Thank you guys, and I appreciate